Assalamualaikum warahmatullahi wabarakatuh. My name is Abdullah bin Uthman. My matrix number is 01DAB21F2021, and my team and I will be presenting what is Murabaha Shop House Financing and under the course Credit Analysis and Financing. So for our agenda today, we will be discussing these few key topics, including introduction, what is Murabaha Shop House Financing, recovery process, legal action, and for our conclusion to end this slide. So for our introduction, the Islamic financing structure known as Murabaha or cost plus financing involves an agreement between the buyer and seller regarding the markup and cost of an asset. Markup replaces interest, which is prohibited by Islamic law. Because of this, Murabaha is recognized by Islamic law as a legitimate method of credit sale rather than an interest-bearing loan, also known as qard ribawi. Similar to a rent-to-own agreement, the buyer does not actually own the property until the loan is settled in full. So, to understand Murabaha, in a Murabaha contract of sale, a client petitions a bank to purchase an item on their behalf. Complying with the client's request, the bank establishes a contract setting the cost and profit for the item, with repayment typically in installments, because a set fee is charged rather than riba, or also known as interest. This type of loan is illegal in Islamic countries. Islamic banks are prohibited from charging interests on loan, according to the religious tenet that money is only a medium of exchange and has no inherent value. So banks must charge a flat fee for continuing daily operations. So for the example of Murabaha, Zach wants to purchase a boat from Ramon's boat shop that costs $100,000. In order to accomplish this, Zach would get in touch with the Murabaha bank, which would purchase the boat from Ramon's boat shop for $100,000 and then sell it to Zach for $109,000, which would be paid in 3 years worth of installments. Zach does not incur interest when paying the bank that owns the asset. The payment is a set sum. Moreover, Zach won't be assessed any further fees if he misses any payment. Zach's extra payment over the boat shop's cost is effectively a 3% loan, but since it's provided as a fixed payment with no further fees, it's allowed by Islamic law. So in this case, the $9,000 that came from the $100,000 is known as a cost plus profit, also known as profit plus sale, which is allowed in Islam and it's Sharia law. So what is Murabaha Shop House Financing? Murabaha Shop House Financing is a financing method where a bank buys a shop house, a building used for both business and living, and then sells it to the customer at a higher price, which includes a profit margin. The customer pays this total price in fixed installments over time. This method complies with Sharia law by avoiding interest instead of using a cost plus profit sales structure, ensuring the transaction in ethical and transparent according to Islamic principles. So knowing that Murabaha contracts have so much benefits, such as it does not contain forbidden elements, prohibited elements such as riba, gharar, maisir, and it follows the profit margin instead of the volatile interest rates, why do people still avoid Murabaha contracts? So this is why. People may avoid using Murabaha contracts due to several factors. Firstly, the cost associated with these contracts can be higher compared to conventional loans, as they involve a profit margin for the seller. Additionally, the complexity of structuring and managing these contracts according to Islamic law can be a deterrent, requiring specialized knowledge and compliance with Sharia principles. This complexity also often leads to longer processing times and more paperwork. Moreover, in some markets, there is limited availability of financial institutions offering Murabaha, reducing accessibility for potential users. Finally, the perceived inflexibility of these contracts, which strictly define the terms and use of funds, can be less attractive compared to more flexible conventional financial products. So now we will take a look at the recovery process. So to start the recovery process, we will look at to review the financing agreement, then to initial communication, legal and financial advisory, structuring the debt, and then last but not least, alternative financing solutions. So to start off the recovery process, the first step is to review the financing agreement. Understand the contract first. Understanding the Murabaha agreement, where Murabaha contract is a type of Islamic financing where the bank purchases property, in this case a shop house, and sells it to the company at profit plus margin. The company then repays the bank in installments over an agreed period. Then the contract terms. Verify the original financing amount and understand bank's profit margin included in total repayment amount. For the repayment schedules, examine details schedule of monthly repayments and noting the amount and due dates. Then the penalties and charges. Understand any penalties for late payments, including in additional fees. Identify any other costs that may be incurred due to default, such as legal fees or administrative charges. That is all from me, and I'll pass it over to my next friend, SYASHA.
Assalamualaikum to Puan Nur Azad and my fellow friends. My name is Nur Syasha binti Muhammad Shukri. My matrix number is 01-AB21F2001. I will move to the second recovery process, which is initial communication. The first one is we need to engage with the bank. Properly inform the bank about the financial difficulties and inability to make repayment, which in this station, Jelita SDMHD could not make repayment since January 2024. Transparency can build trust and facilitate cooperation. Next, we need to prepare a detailed documentation of company's financial status, including balance sheet, income statement, and cash flow statement to present to the bank. Lastly, for initial communication, we need to engage in negotiation. Schedule a formal meeting with representative from bank to discuss a financial difficulties and explore a possible solutions. Presented a well-documented case in engaging in open dialogue and being flexible in proposals. This can work toward mutually beneficial solution that helps stabilize your financial situation. Recovery process, which is legal and financial advisory. A legal expert specializing in Islamic finance can review Murabaha agreement and also provide a guidance and offer a strategic insight. Look for a legal professional with a strong track record for successfully handling similar cases. Conduct a thorough analysis of your company's financial status, including cash flow, projection, debt capacity, and financial stability. Consult with your legal counsel to understanding the implication of default and ensure that any agreement with the bank are legally sound. Look for advisor with a strong analytic skills to accurately assess a financial health and develop effective strategies. One of the recovery process is restructuring the debt. We need to reschedule the payments. Propose an extension of financing term to reduce the monthly repayment amount. Profit rate adjustment. Negotiate for a lower profit rate to make repayments more manageable. Defer a payment plan. Because a temporary deferment of payment with a clear plan on how company will catch up on a missed payment. Benefit from restructuring the debt to improve cash flow by lower monthly payment can free up cash for other operational needs. With more manageable debt obligation, company can focus on stabilizing and growing in business. This is alternative financing solution. The first one is we need to offer additional collateral to secure more favorable terms. If the shop house is large enough, selling a portion of it can provide immediate cash to reduce debt while retaining some of the property. Seek new investor to inject capital into company which could be used to meet repayment obligation. For alternative financing solution, which is equity crowdfunding, raising a small amount of capital from a large number of investors. Typically, we are online platform in exchange for equity. Alternative financing solutions provide a wide range of options for companies facing financial challenges. By carefully assessing their needs and exploring various financial strategies, companies can find the right solution to enhance liquidity, support growth, and ensure financial stability. That's all from me. I will pass to the next presenter.
Assalamualaikum warahmatullahi wabarakatuh. My name is SYAZLIYANA binti Baharudin. My message number is 01DIB21F2005. The first principle is Sharia Compliance Legal Processing. The Sharia Compliance Legal Processing are divided into two parts. The first part is bank can file a lawsuit of breaching of contract arising from the delay in repayment of the loans. Therefore, the courts will consider both of contract terms that the Sharia principles that have been agreed during the contract agreements. And the second one is remedy. Remedy refer to action or step that can be taken to improve, overcome, or reduce the effect of the violation of right or obligation set by law. The court can order remedies such as repayment of outstanding debt, disposal of asset, or other Sharia compliance solutions. The second principle is conciliation under the Sharia principle. If the customer default on the agreement, the bank can initiate foreclosure proceeding to respond and sell the asset according to the amount of the loans, late payment, or other additional financing that has been agreed. Process from the sale will be used to settle outstanding debt. Any excess amount after clearing the debt will be returned to the customers. Next is restructuring and resolving. Islamic law strongly encourage peaceful settlements. The bank and the customer can regulate the terms to ease the financial burdens. For example, resolving payment or restructuring financial agreements. And the last one is alternative dispute resolution, ADR. Mediation and attribution is a solution to resolve conflict without having to go through a long and expensive court process. This method is required under Sharia to resolve disputes amicably. The Kuala Lumpur Regional Arbitration Centre (KLRSA) provide facility for Islamic arbitration. The MPS Sharia Advisory Council can be consulted for Sharia decision and specific issue that arise during disputes. There are 4 steps of legal action. The first one is notification of default. The second one is proposal of restructuring. The third one is legal proceeding, and the last one is enforcement of judgment. The first legal action is notice of default. Bank Islam Berhad sent an official notice to Jelita Sdn Berhad before notifying them of missing payments since January 2024. The content of the notice will state the outstanding amount, the missing payment dates, and any applicable late fee, and a request for immediately payment or a proposal for a remedy. The document involved is a notice of default. The notice timelines require action within 30 days. The second one is restructuring proposal. The bank can propose a restructuring plans to Jelita Sdn Berhad to modify the repayment terms. The content of the documents are proposal include optional such as extending the loan term, reducing monthly payments, or temporarily deferring payments. The document is proposal restructuring agreements. The negotiation periods can range from 30 to 60 days, depend on the complexity of the restructuring plan and the responsibility of Jelita Sdn Bhd.
Assalamualaikum to our lecturer, Puan Noazah binti Muhammad Sharif. My name is HADI bin Omar and my matrix number is 01Db21F2008. Today, I will be presenting about the third legal action in Murabah financing, which is legal proceedings. Under legal proceedings, there are 4 steps involved. The first step is financial warning signals. Under financial warning signals, there are 3 financial statement involved, which is the first one, balance sheet. Jelita Sdn Bhd will slow down in the receivables collection period. The second financial statement involved is income statement. There will appear a big difference between gross and net sales. The third financial statement involved is bank account statements. Borrower issues post date checks to customers. The second step in legal proceedings is management warning signals. This happens because of the inability to make repayments on schedule and the unrealistic prices of goods and services. Next, I will continue with the third step in legal proceedings, which is operational warning signals. This happens because of poor financial records and operational controls in the company. Also, poor maintenance of plant and equipment is another reason why these legal proceedings occur. The fourth step is general warning signals. This happens due to bad economic conditions such as inflation and deflation. Inflation is a gradual loss of purchasing power reflected in widespread increases in the prices of goods and services over time, whereas deflation is a decrease in the general price level of goods and services. So, both of these 2 factors are uncontrollable factors. Next, I will continue with the fourth legal action under Murabah financing, which is enforcement of judgment. Under enforcement of judgment, there are 5 steps involved. The first step is reducing debt to judgment. It is a legal proceedings on the credit problem so that through the process of litigation, the debt can be paid off to the bank. While judgment is a legal document through the process of court order that confirms the obligations and claims of parties to the credit. The second step in enforcement of judgment is enforcement and collecting of judgment. Under enforcement and collecting of judgment, there are 2 elements involved, which is the first one, levy. Levy is outright seizure of property held and sold at public auction to settle the debt. The second element is garnishment. Bank require court order to instruct third party to forward fund into the bank. For businesses, a bank will require a garnishee order on payment of tenders or contract to repay the outstanding credit. I will continue with the third step under enforcement of judgment, which is equity receivership. The court may appoint a receiver to take control of Jelita Sdn Bhd assets. The function of receiver is to get as much as possible from the business to pay the bank. The fourth step under enforcement of judgment is public sale. It is used when the market value of the security charged as collateral is higher than the amount of financing owed to the bank. The bank would apply for court order to sell the charged assets to the public. Public sale is a forced liquidation of collateral by banks through legal aid. The last step under enforcement of judgment is bankruptcy. When Jelita Sdn Bhd company is unable to pay the debt in various means, they will apply court order for bankruptcy. The purpose of bankruptcy is to provide orderly repayment of financing without totally debilitating a debtor. The court will appoint a committee to take care of debtors' assets, then liquidate the assets and divides the proceeds among the various creditors. Next, I will continue with the conclusion for our presentation under Murabah financing. There are 4 conclusions that we can conclude from our presentation. The first one is Sharia compliance. Murabaha is a Sharia compliant financing method as it avoids interest-based transactions and adheres to Islamic principles. The second conclusion is transparency. It offers transparency in pricing, as the cost and profit margin are disclosed upfront to the buyer. The third conclusion is limited risk sharing. Compared to some other Islamic financing modes like mudarabah or musyarakah, murabaha involves limited risk sharing between the parties. The last one is asset-based transactions. It is commonly used for asset-based transactions where the goods are tangible and easy to value, making it suitable for certain types of financing needs. Overall, Murabaha financing provides a structured, transparent and a Sharia-compliant financing option that is suitable for specific types of transactions and aligns with Islamic finance principles. That's all from us. Thank you.
Thank you for listening to our presentation.